Closing bell. Since the markets are shut for the day, it gives us some time to ponder over larger issues. Cohen Steers, which is a large global investor in the real estate space, is eyeing to invest 5 to 10% of its $60 billion fund. CNBC TV 18's Nisha Poddar caught up with Joseph Harvey, the chief investment officer at Cohen Steers, and began by asking him why it has taken so long for India to benefit from the $60 billion fund.
We're one of the largest investors in listed real estate companies around the world, REITs, and listed infrastructure companies, also a global strategy. We have invested in India historically, but it's been very small relative to our portfolio. And one of the reasons why is the universe of public companies in India isn't exactly what we're looking for as investors. The existing universe of companies is rather small. They're development companies, so they own large land banks, and their profits come from the development and sale of real estate, compared with what we're interested in, which is the ownership and operation of income-producing assets like office buildings, shopping centers, industrial properties. And on the infrastructure side, it would be similar income-producing assets like toll roads, airports, cell tower companies, hard assets that generate strong cash flows that are predictable, and cash flows that can grow over time. And we like to own those assets in companies that have business strategies to grow over time through acquisition of assets, and that could be from private market players or from government entities.
So what is the kind of expected returns that you look out for?
Well, in the global portfolio, we would be interested in returns in the 8% range, and if 3 to 4% of that came from current dividend income, and the balance from growth over time, we would be, very pleased for our investors. To invest in an emerging market like India, we would require higher returns to compensate for the inflation risk and other macro risks, and including the currency risk.
So how much funds could you really deploy if the way the restructuring goes, it really is palatable to your funds?
Well, it depends on the exact strategy. We've run many types of strategies, global ex-US. We have regional strategies as well. So it depends on the strategy and the risk for the particular client. But under the right circumstances, and assuming we get comfortable with the top-down or the macro situation in India, and if the companies are structured right, we could have 5% to 10% of a portfolio in either real estate or separately infrastructure allocated to India, if we have the types of companies that produce the results that
So 5 to 10% of a $60 billion?
Correct.
Okay, we'll take a break on that.